All right, good morning. Today is June 8th, 2022, and I'm back with another edition of the Wednesday live show. And let's see, the big upcoming economic number is on Friday. It's going to be the CPI, the inflation numbers. And everyone's focused on that because the the last was 8.3. The one prior to that was 8.5. And everyone wants to know how inflation is doing, whether it's coming down, because that's going to determine what the Fed does. And since we talked last time, I believe the Fed, one of the Fed members came on CNBC and said that they expect to also hike in September. See, the debate lately has been whether they're definitely going to hike in June, 50 basis points, and they're definitely going to hike in either July or August. I forget which month the meeting is, and then everyone wants to know whether they're going to pause in September. And so, um, anyway, the funny thing is you can't fight 8% inflation with, a couple of percent in Fed funds rate. And so I think the market is kind of trying to price in a 3%, roughly a little over 3% terminal rate, they call it. That'll be where the Fed pauses their hiking or is done, sees what happens. But anyway, it's a mess. So it's just a mess no matter how you slice it. And all that aside, so Friday is going to be an important day. Here's what's kind of strange. So here's the SPX chart going back to, I got this trend line drawn across the highs starting right at the beginning of the year. And what's interesting about this little area that we're in right now is look at this consolidation, right? I mean, we've been trading in a range here for 2, 4, 6, 7 days in a row. S&P has been, it's a pretty wide range, but nevertheless, it's a congestion area. And so in theory, when it breaks out of this area, it's going to make a fairly significant move, right? Whenever you get sort of a period like this. And so, obviously any move prior to Friday morning is suspect, but depending on which way it breaks, you could get a pretty substantial move. So I always look at this, and by the way, 4,200, you can see the 50 days sloping down here. 4,200 is a pretty substantial level. And so a rally, theoretically, a rally could take us up to, right around 4,200 or even a little bit above. You can see back over here, 4,300 is an even bigger level, right? Because that's where market sold off, tried to rally a few times and just couldn't get above 4,300, and that's where this leg started. So it's going to be kind of interesting to see what happens. Seems like the S&P's been pretty resilient, especially off of the lows, but this move off the lows came really quick. It was a couple of days, actually, obviously 3 days, but the move itself was like a 2-day move, and then it stalled out right in this area here. So everything's kind of just seems like it's in summer mode already, even though it's a little early in the year. But depending on what the numbers look like on Friday, I think that's probably where next week the market's going to take its cue from. So let's look at Nasdaq 100, see what that looks like. Same sort of thing. Yeah, so here you go. Back at the beginning of the year, I don't have a downward sloping trend line, but you can see it's in the same sort of like little congestion area here. And interestingly enough, so the S&P and the Qs, have that downward sloping 50-day moving average above, which doesn't necessarily mean a whole lot. You can see back over here, it just rallied right through it. So, but interestingly enough, the Russell 2000 yesterday was able to close above that 50-day. And so I looked through a bunch of charts last night, and a lot of small cap stocks and just kind of obscure stocks look like they have potential. I won't say bottoming patterns, but they sold off so much. As you know, the average stock, the majority of smaller cap and the ones that aren't mega cap stocks are down significantly, and so a lot of them look like they've kind of bottomed out. As you know, I like to look at ARC here, right? ARC is a good proxy for momentum, and you can see how it's sold down, and I mean sold down significantly, right? I mean literally from the beginning of April here down to the lows from 70 to 35, right at a 50% sell-off there, and obviously that's on top of the significant sell-off from the highs, which were back in the first quarter of 2021. So off of the highs here, 160 or whatever, down to 35. But it's amazing that something can be down so much and still sell off 50% just in a leg down like that. So, but anyway, as you can see here, a lot of sideways price action, and even as we speak today, it's trying to rally up. So, quite a few tech stocks, Nasdaq stocks look like maybe they're getting some buying interest here, but that can evaporate quickly. So, real quick, let's look at the Dow, and Dow's held up. I would say the Dow's held up relatively well. It seems to have rallied a little bit more off of the lows than the other indexes. But of course, the Dow is its own thing, and so still in favor of mega cap stocks, right? Same sort of thing, a bigger rally off the lows, but that same consolidation pattern. So all these indexes are kind of in a holding pattern here. I suppose, waiting on the CPI number to give it some direction. So that's going to be really interesting on Friday morning. It's going to be really super interesting to see how those numbers come out. um, Energy stocks have been on a tear. The energy stocks and materials, especially energy, has been the one sort of bright spot. And of course, yeah, it's like the one sector in the market that everyone's kind of piled into. And oil, was 119, almost 120 bucks a barrel, which is just crazy. Let's see, I think I can pull up a chart of that here. WTIC. And so, the thing about going back to inflation is, that's as far back as I can go on this. But the thing about inflation is, with high oil prices, it's pretty darn tough to have inflation come down, because everything, everything at the stores, everything you buy, everything gets moved around on trucks. And man, I'll tell you, gas is $4.79 here. $4.79, which when it hits $5, when and if it hits $5, and obviously some places it is already, but when the average price of gas in the country, when and if it hits $5, I think that's going to be a big psychological level. I used to say that at $4, but I mean, here's the thing: you hear a lot of complaining about it, and you see a lot more on TV, on the regular shows, about prices going up, all that type of stuff. um, you guys know Target came out with another warning yesterday. That's kind of interesting. Target's probably a pretty good proxy for the consumer, so everyone's wondering how the consumer's doing. That's the big talk, whether the consumer's in good shape or bad shape or whatever. But Target and Walmart, that ought to tell you quite a bit. It's yeah, it's interesting. I mean, Walmart, geez, these moves down too happen so fast that these are the type of companies that you just don't expect these kind of moves in that short of amount of time. Um, in a normal market. So definitely not a normal market. Quite frankly, it's amazing how the S&P's managed to hold up. So we have an open trade in JO and looking pretty good, right? It finally, it's always it's kind of low volume, but it's got that nice uptrend and then the decent pullback. You can see it's formed sort of a W pattern here, and it's kind of hanging around this side here. So looking for it could potentially come in a little bit, but looking for this cup to complete, kind of like back over here. A little bit of a similar pattern back over here where you had sort of the first part of a W and then the second part, and you can see it's a lot cleaner on a line chart, and switch to a line chart, it eliminates the gaps. And so yeah, it's got a pretty decent look to it, right? There's I could draw some trend lines across the lows, trend line down here, nice little trend line break, kind of, may retest it, but it's not extremely volatile. However, it's gappy from day to day, so you just never know. But once it gets when it starts getting some upside gaps, it can really take off. Let's see. U.S. steel continuing to sort of base out here, right? It's gonna have to rally up and start a decent upward move in order to trigger in, but that's sort of the idea of it. And typically you can see, well, let's see, if you look back here, I guess the beginning of 2021 is kind of a similar pattern, right? There's a couple of spots on the chart that had similar patterns to now, where it had a significant rally and a big sell down, based out, and then turned back up. So quite frankly, let's see, SLX, this is the steel ETF. It's kind of interesting. This is the steel ETF has already sort of bottomed out and rallied up. So trying to think, let's see, there's STLD. I was trying to think of a few steel stocks. I'm not that familiar with the sector nowadays. It's been been a long time, but that's an interesting pattern right there. That's I guess you could call that a cup and handle, right? So it's like there's the cup, and then nice little bull flag for a handle. So that one's actually looks like it could potentially, if it can rally up here past say 90. Looks like it can go up and hit the highs. I don't know if you can, well, that intraday high, that's kind of odd. And last but not least, company called MP Materials. This actually, this came really close to triggering in yesterday, right? I mean, it poked through the trigger, closed just below it. You can see it's coming in a little bit today, but it looks like it's starting to make the turn here. You got a nice pivot low. Real nice sell down, perfect pivot low, kind of inverse head and shoulders building potentially, and it's starting to act like it wants to come out of that. So it's definitely got some potential here, right? And obviously the idea is that when it starts to make that turn, we want to jump on for a retracement back up to at least about halfway, 3/4 of the way is a good target area. Somewhere up here in the 50s. So we'll have to see on that. As far as like the overall market, I want to look at a few of these spider sectors here. So let's see, communication services. There's like 10 or 12 of these things. But anyway, just a real quick communication services. Just a real quick look around the different spiders. You can see that almost all of them, except for energy, which is hitting a new high now. But consumer discretionary down fairly significant. XLE This is the one that hitting a new high here with the price of oil. So, and of course, I like to look at XOP. So, I mean, that's the strength there. And we talked about this last week. There wasn't really much of a setup here, unfortunately, because over the past couple of months, I've been talking about theoretically a pullback in this sector that would set up for a swing trade. Um, this is more of a breakout type situation, right? You had a lot of times these momentum, sectors that catch the momentum like this clearly has significant momentum. Um, you get like a real quick sell-off, a few days, couple of days, and then it just starts back up. And so it's not necessarily a decent swing trade setup, unfortunately, because and it's such common knowledge too. That's the sector where all the hot money is flowing, right? So, and I don't know what it's going to take to bring the price of oil down. That's the interesting thing. So, healthcare, this doesn't look too bad, to be honest with you, as far as one of the spider sectors. And it's had a decent pullback. It's starting to come off of these lows here. It's kind of similar to what it did over here. Over here, it kind of had a double dip, right? It came down, rallied up, came down again, and made the rally. And so it'll be interesting to see whether this one does something similar or whether it does sort of what it did back here last fall, sold off, bottomed out, turned right back around. So it's got to have a fairly decent look for a rally up. Let's see, moving on, XLK, which is technology. Technology, kind of looks like the Qs. Sell down since the beginning of the year with obviously that one big rally in March. And so I guess when I was looking at this last week, it kind of looked like, the market in general, not just particular chart, but kind of looked like it was going to have a rally similar to the one back in March, but it sort of stalled out about halfway. So this looks very much like the overall market. Let's see, XLRE. I'm going through the spider sectors here just to get an idea of what's what. And so far, the XLE energy sector is really the only one that is obviously the one that's performing well. And so a lot of these other ones, they're down significantly, coming off of the lows. And now XLB is the material sector, and so we looked at like the steel, and quite a few material stocks also look good, right? And so yeah, this is rallied pretty well off of the lows, and obviously materials are part of the inflation story. So yeah, I got this GSG. This is, look at that, iShares Commodity Index Trust. So that's kind of interesting. It kind of looks like the price. It kind of looks like that chart of oil, right, where you had that huge spike up in March, and that obviously the Russian thing. And then look at this. It's continuing to hit these highs. So this is where your inflation's coming from. And commodity index trust. Yeah, inflation is like the number one issue in America right now. And so just like I was saying before, everything's based on these CPI numbers and how that's going to affect what the Fed does. So it's going to be interesting to see. Let's see. Moving on, XLU, utilities. Utilities hanging in there pretty well. I can't say that I have a really good handle on what moves the utilities. Theoretically, it's interest rates, right? And so interest rates have come down a little bit, right? The 10-year was over 3%. Now it's come down a little bit. And so the big question is, what the expectations for what the Fed's going to do. Oh, and here's the other thing that I mentioned last week is that the Fed hasn't even begun its quantitative tightening, as far as I know, and that happens on the 15th. So let's look at TLT here. Yeah, there's the 20-year. Huh. Well, this looks a lot weaker than I thought for whatever reason. It looks like it's past. I haven't looked at this in a while, but that's interesting. Moving on, there's only a couple more sectors left. Xlp, Consumer Staples. Yeah, I guess, boy, I don't know. I guess that was the Target or Walmart sell-off there. And then there's been a little bit of a bounce here. Pretty nasty looking, though. Yeah, this was kind of a safe haven, right? Like going into the year, it sold off along with everything else and then rallied up to new highs and then sort of sold off. Industrials, the other big thing, the industrials, geez, this is a mess, right? I mean, you got an entire year here from April to April of just a big choppy range going nowhere, and then a sell down, right? Bounce, and then last but not least, and watching CNBC yesterday, I heard someone recommend financials, but I'll be honest with you, the financials have never been extremely exciting, and this is a nasty looking pattern if you ask me. This is kind of it looks like a big rounding top, and you got the high here at the beginning of the year, and then a sell down, another lower high, and a bigger sell down, a lower high, right? So you got several lower highs here, which are different. Have a different look than the rest of the market. There's three highs, and then there's that one where it tried to rally up and sold down. So, the fact that it's rallied a little bit off the lows and it's kind of stuck here. I mean, sure, it could rally up again, but it just looks like a series of lower highs. So the financials, I mean, they just don't look all that great to me. Goldman Sachs has like sort of a big nasty rounding top look to it. That obviously doesn't mean it can't rally back up, but the bigger picture of this does not look all that great. Let's see what JP Morgan looks like. Some of these mega cap financials. Yeah, same sort of thing. I mean, that's a pretty ugly. And quite frankly, this like rally and little congestion here looks very similar to the last time it tried to rally up, and people get excited. The old bear market, the SPY. People get excited on these bear market rallies, especially back here in March, right? Because I mean, it sold off fairly significantly in a decent correction, and then it rallied so close to the all-time high that, yeah, I mean, really close to the all-time high. And so this last leg down, which by the way, this really the majority of this last leg down started here when Jerome Powell was extremely hawkish. So I think he's confirmed for a second term now and everything. And so the Fed is really pretending anyway. I don't know if they're really serious or if they're just pretending, but they seem to be really super serious about inflation, and they have to be, because that's the one thing that the administration's taken the most heat for, right? And that's Biden's top priority is inflation, and there's no easy solution for it, obviously. Whether raising interest rates is going to, I read something yesterday that was kind of interesting, and basically it said that the only way to eliminate inflation or to fight inflation by raising interest rates is to actually raise rates to above the inflation rate, which would mean that the Fed would have to raise rates to 8%. No way in the world that's going to happen. That would probably collapse the financial system because of the levels of debt. So they're in a real pickle, and it's going to be interesting to see how they proceed. But the thing of it is, CPI is another strange thing. Obviously, it probably underestimates the actual rate of inflation for a lot of products that we buy. And so you've seen like, all the different ways they pick apart how CPI is calculated. So anyway, we find ourselves in a mess, and you can't let inflation get entrenched because it just lowers everybody's standard of living, right? And creates lots and lots of problems. So I don't know quite frankly, I don't know what the solution is, but I know how we got here, and it's pretty simple. It's just the same thing that's happened all throughout history is they water down the money supply by creating more and more money, water it down, and then the inflation rate goes up. And of course, lots of contributing factors. And so it is what it is. Um, today's Wednesday, so we got today and tomorrow, and I expect the market to just kind of stay in this holding pattern. Now it could try and break out. I think it seems like lately, the market itself is trying to get comfortable with the current situation, right? And it's come off the lows considerably, and so this little consolidation pattern. It's really interesting looking consolidation patterns. So the only thing I'm wary about is like sort of a false breakout in one direction or the other. So it kind of feels like this wants to resolve to the upside. And that's just pure conjecture, right? If I had to guess, I would say that this resolves to the upside, and there's a big hurdle obviously at 430. First 420, but let me go back. Let me go to the SPX real quick. Not a whole lot to really talk about ahead of the numbers because there we go. That's a little bit better picture, but yeah, really, really interesting little pattern here of consolidation. And typically, when you get this much of, and it's not that tight of a pattern, but in the bigger scheme of things, it's pretty tight. It's just a lot of up and down chop. But when you get a consolidation that looks like this, typically when you get a move out of it, it's fairly significant in one direction or the other. And so, obviously it's kind of a wait and see type thing. Wait and see which direction it breaks. In theory, if it breaks prior to Friday, then it could be a fake out, right? Because everything's going to be based on the CPI numbers on Friday, and then the most important thing on Friday is going to be where does the market close. So that's going to be the real sort of telltale sign there. And then of course next week is the Fed meeting, and so that's gonna when the CPI numbers come out on Friday, then everyone's going to start speculating and start to conjecture on what the Fed does now, and then of course we got the Fed announcement next Wednesday, and there's always the possibility that they shock the market. And so, hey, if for some reason the CPI number on Friday came in over 8.5%, I'm not even sure what the consensus is because they're usually wrong anyway. But that 8.5 year-over-year CPI print was the high water mark. And if it were to come in over that, which I don't think it's expected to do, then you never know. The Fed could move 75 basis points and shock the market. So anything can happen, but it's going to be an exciting week next week, and it could be really dull prior to that. But I think it's going to be kind of exciting. And then, of course, after that, we're going to be heading into the, a couple weeks away from 4th of July weekend, a few weeks away, I should say, and things start to maybe get a little bit more dull after that. But anyhow, so there's a lot of stocks that look like they could be coming off of, sold down extremely. Go back to ARC real quick. A lot of tech stocks look like they're sold off. Oh, I know what I want to look at. I was looking at Nvidia. Because that's one of the preeminent semiconductor stocks. Yeah, same pattern as the overall market, basically. Huge sell down, this consolidation pattern. There's a lot of stocks that look like they're just ready to sort of bounce. I mean, it doesn't mean that they're going back to the highs or anything like that. Did I see something this morning about Intel warning? I think so. So that's kind of interesting. Typically when you get a company like Intel warning, all the other semiconductors get hit pretty hard. Let's see what AMD looks like. Yeah, AMD kind of holding in there a little bit. This is kind of a constructive pattern, honestly. Break over 110, take you back up here. Nice little cup. So anyway, it is what it is. Everything's kind of in limbo right now ahead of the CPI and ahead of the Fed, and so we'll just have to wait and see how things pan out. So thanks for tuning in. I'll see you back here next week.